How to analyze a company's financial statements. Hi everyone. Welcome back to Stock Wisely, the channel where we provide in-depth market analysis and insights on stocks, cryptocurrencies, and more. In this video, we will be discussing the importance of analyzing a company's financial statements before investing in their stock. We will provide an in-depth overview of the three main financial statements: the income statement, balance sheet, and cash flow statement. We will explain how to read and interpret each statement, and how to use this information to make informed investment decisions. Additionally, we will provide examples of how to use financial ratios to evaluate a company's financial health and compare it to its competitors. By the end of this video, you will have a solid understanding of how to analyze a company's financial statements and make informed investment decisions. Why analyzing financial statements is important. Before investing in a company's stock, it's crucial to understand its financial health. This is where a company's financial statements come into play. Financial statements are reports that show the financial performance and position of a company. The three main financial statements are the income statement, balance sheet, and cash flow statement. The income statement shows a company's revenue and expenses over a specific period of time, typically a quarter or a year. The balance sheet shows a company's assets, liabilities, and equity at a specific point in time. The cash flow statement shows a company's inflows and outflows of cash over a specific period of time. Company financial statements and reports are typically available on the company's investor relations website, which can be found by searching the company's name and investor relations in your preferred search engine. The most common financial statements that companies release include the balance sheet, income statement, and cash flow statement. These can be found in the company's annual report or quarterly earnings releases, which are also typically available on the investor relations website. In addition, financial data providers such as Bloomberg, Reuters, and Yahoo Finance offer free and paid financial data and analysis tools that can be useful for researching and analyzing companies. It's important to do your due diligence and verify the accuracy of any information you use in your analysis. How to analyze an income statement. Let's start with the income statement. The income statement shows a company's revenues, expenses, and net income. Revenues are the total amount of money a company earns from selling its products or services. Expenses are the costs incurred by the company to generate revenue. Net income is the amount of money a company earns after deducting its expenses from its revenues. When analyzing an income statement, it's important to look at the company's revenue growth, gross profit margin, and net income. Revenue growth shows how much the company's revenue has increased over a specific period of time. The gross profit margin shows the percentage of revenue that a company keeps after deducting the cost of goods sold. The net income shows how much profit the company has made after deducting all its expenses. How to analyze a balance sheet. Now let's move on to the balance sheet. The balance sheet shows a company's assets, liabilities, and equity at a specific point in time. Assets are the resources that a company owns, such as property, equipment, and cash. Liabilities are the debts that a company owes, such as loans and accounts payable. Equity is the amount of money that a company's shareholders have invested in the company. When analyzing a balance sheet, it's important to look at the company's liquidity and solvency. Liquidity refers to a company's ability to meet its short-term obligations, such as paying its bills and debts. Solvency refers to a company's ability to meet its long-term obligations, such as paying off its long-term debts. How to analyze a cash flow statement. Finally, let's look at the cash flow statement. The cash flow statement shows a company's inflows and outflows of cash over a specific period of time. There are three types of cash flows: operating, investing, and financing. Operating cash flows show the cash flows from a company's day-to-day operations, such as revenue and expenses. Investing cash flows show the cash flows from a company's investments in property, equipment, and other assets. Financing cash flows show the cash flows from a company's financing activities, such as taking out loans or issuing stock. When analyzing a cash flow statement, it's important to look at the company's free cash flow, which is the cash that a company generates after deducting its capital expenditures. This gives investors an idea of how much cash a company has available to pay dividends or reinvest in the business. Using financial ratios to analyze a company. In addition to analyzing the individual financial statements, it's also useful to use financial ratios to gain a more complete understanding of a company's financial health. Financial ratios are calculations that provide insights into a company's financial performance and position. There are many financial ratios, but some of the most common ones include the price-to-earnings ratio, the debt-to-equity ratio, and the return on equity ratio. The price-to-earnings ratio compares a company's stock price to its earnings per share, giving investors an idea of how much they're paying for each dollar of earnings. The debt-to-equity ratio compares a company's debt to its equity, giving investors an idea of how much debt a company has in relation to its equity. The return on equity ratio shows how much profit a company is generating for each dollar of equity invested. In conclusion, analyzing a company's financial statements is an important part of making informed investment decisions. By understanding a company's revenue growth, gross profit margin, net income, liquidity, solvency, and free cash flow, as well as using financial ratios, investors can gain a better understanding of a company's financial health and make more informed investment decisions. That's all for today's video. Thank you for watching, and don't forget to subscribe to our channel for more market analysis and insights.